New mortgage news that could affect the rest of your life. Hello, my name is Barry Horvath, and this is Moving Forward TV, your local real estate and mortgage update.
And I am Delynn Gaston. Thanks for joining us today. Okay, so the good news is that the FHA is going to slow down on their rate increases that they have just keep on putting on us over the last couple of years. They keep on going up on their MI because finally they have found a way to continue to fund their program.
Hooray!
Yay!
Where's the bad news? Oh, I have the bad news. Lucky me. The bad news is you are now going to own that insurance forever. So tell me, Delynn, what exactly is this whole MI thing and what does it do?
Okay, so yeah, let's just real quick explain. Okay, MI, you hear people talk about MI, your mortgage insurance. There's PMI and there's MI. Basically, the P in front, it stands for private. On a conventional loan, Fannie Freddie loan, PMI, private mortgage insurance. On an FHA government loan, it's not private, it's government. So it's MI, mortgage insurance.
So this whole new ruling goes into effect in June,
right,
where you keep your mortgage insurance
forever. Basically what it is right now, the mortgage insurance on an FHA loan, it goes away in about 5 years.
Once you hit 78% loan to value.
Right, which of course is determined by your bank, not by you.
Yeah.
So,
but I think I have 22% equity.
So the mortgage insurance will go away. However, come June 3rd, FHA says, no, we're going to keep it there for the whole 30 years. Forever, for as long as you're paying for it. Now, just again, on a conventional loan, the PMI goes away again once you reach 78% loan to value, determined by your bank. It automatically goes away. It doesn't stay forever.
Oh, by the way, there is going to be one little increase.
One more.
We failed to mention. On April 1st, FHA just decided they need another 10 bips. So the monthly MI is currently 1.25.
Right.
And it's going to go to 1.35, which can affect your payment by,
a smidge.
A smidgen. It's only a few bucks. So what? It goes to the government. It's good. It's a good cause.
Right. A good cause. You're home. All right. So let's look at conventional and FHA side by side a little bit. Just a quick look, because you know what? If you have stellar, sparkling stellar credit.
That's our word of the week, stellar.
Stellar. You probably aren't going to go with an FHA loan anyway. If you have a minimum down payment, well, first of all, let's say on a conventional loan, you need at least 5% down. If you have less than 20% down, that's when the PMI kicks in. You have to have PMI if you have less than 20% down on a conventional Fannie Freddie loan.
What is stellar credit in today's world?
In the Fannie Freddie conventional world, stellar credit is like 800 credit scores. I know. People say, oh, I have like 700. Right. Oh, good. 700 is considered good now. Unfortunately, It's not stellar. If you have, let's say, 5% down, you're going to have PMI if you're going to go with a conventional loan. If you have, sadly, the PMI companies, they start their rate increases if you have under a 780 credit score.
Right.
So you have a 779 credit score and you say, oh, I have stellar credit.
It's an adjustment.
It's an adjustment.
It makes it higher. It's more expensive.
It is. It is. So if you have, now imagine if you have a 680, again, still good credit, but you have a 680 credit score. Your PMI, and you're putting 5% down, your PMI is going to be higher than the person who has a 780 credit score.
So conventional wisdom would almost say, if you have below a 680,
right,
you probably want to look at FHA still.
Right. At the very least, your mortgage officer should sit there and compare the two for you so that you get the best product out there.
So Delynn, does this mean FHA is now a bad option, considering in June we're going to pay MI insurance forever?
No, it really doesn't. FHA is still a great product out there for people. If you are a minimum down payment person, trying to scrape in, and perhaps if you don't have an 800 credit score, FHA is an absolutely great product.
Absolutely. And looking...
There's a lot of strengths in FHA.
There is strength in FHA. Looking at rates recently, FHA rates are considerably better than the conventional rates right now in the market. And,
yes.
And rates are still awesome. And they are going up, mind you.
They've been ticking up.
We've been watching the trend. Everybody thinks, oh, I'm going to get a great, you're still going to get a great rate,
right.
but you need to move forward.
Right.
Sometime soon.
Right.
So that's
and
one
FHA,
of the...
Yeah, FHA's rates are definitely better right now. They also are much more lenient on credit issues. Several people have a little tiny blemish here or there in their past, or some of them bigger blemishes. FHA is way more lenient than Fannie Mae and Freddie Mac conventional financing on credit.
Absolutely. And FHA does not require any Zippo reserves for closing. So you don't have to have X number of payments set aside in the bank on an FHA loan.
Which you do right now. Fannie and Freddie always require reserves after closing. The other thing with FHA is they require smaller down payments.
Like 3.5%.
Yes.
And conventional,
5%.
5% minimum.
Yeah.
So keep that in mind as well. And of course, FHA, as we know it today, is not credit score driven whatsoever. I mean,
like Fannie Mae is.
Right. Fannie and Freddie, all your conventional, every time something is wrong on your credit, there's an adjustment.
Just be aware that the lower your credit score, the higher your interest rate will be and the higher your PMI will be.
Absolutely. Isn't that funny?
And FHA, not the case.
It don't matter.
It don't matter. So the bottom line is get off the fence. It is time to go buy a house.
Is that
Now I'm doing the New York.
That sounds more Connecticut.
It's Connecticut.
You drink coffee up there.
I do. I have
No,
coffee.
or is that Boston?
I have a mixture. Connecticut's in the middle.
All right. Listen, football season's over. Sunday afternoons are now 100% free. Just go
buy a house.
Go shopping. Get over.
I knew you'd bring football into this somewhere.
Well, we had to. I mean, you know.
The Super Bowl went well, though.
What are we going to
talk for those Ravens fans?
We're not going there. Anyway, thanks for watching our show this week.
Remember, share this show. Facebook, Twitter, LinkedIn, YouTube, all those stuff we're out on. Put this out there, too. We're trying to get people to move. Thanks so much for being with us. We are today and every day
moving forward.
We'll see everybody next week. Bye-bye.